Okay, that could have been way worse. I need to not sell so many of those. All right. So we finally rejected off of the upper trend, but it took us just about all day to tap it. Closing above the bull confirmed today means that the majority of put side neutral positioning is fairly far out of the money. I would say that if we get a cool CPI print tomorrow, expect them to try to gap it up 46.50 maybe. You look stressed. I sold like 500 46 25 30s. So, yeah. And not for a lot of money. How much would you have lost if it went in the money? Well, if we closed at 45.30 or 46.30, so it would have been 450 a contract, like 200 grand. I would have been mostly hedged, but it would have sucked. Well, I have debit spreads open at 4600, 4650 for this Friday. So that would have covered, well, a chunk of it, but then I would need it to go even further. I would have lost most of my profits from them. So that would have sucked, but fortunately, no. Anyway, I'd expect us to moderate back down towards the like SPX 4620, 4615 level overnight. Mostly just because we're really blown out on one side of the neutral positioning, and they'll probably spend most of the night jockeying to get back into place. Dixie up 9 basis points. Yields pushed down across the board for the most part. They were performing a lot better earlier today, and then kind of that end of day pump, we see yields drive down pretty hard. Correlation we're starting to see turn back around with 3-month correlation retesting that bottom. 1-month correlation still really far from where we peaked back on like November 17th, but definitely also turning around. So we're seeing a little bit more aggression in the volatility short. USD JPY, that's too long of a time frame. So we're starting to see that rebound ever since yen kind of blew out on Friday. But we are seeing the forward returns on volatility get very, very close to that neutral point, and that's going to push up yields. If it crosses over, that's going to start to pull on yields and increase demand for tail risk hedging because the forward returns on tail risk hedging will be positive. So but getting close, yeah. So that forward convexity still keeps picking up, picked up quite a lot today. And as we move into the VIX expiration, we'll see more of that, which is not tomorrow, Wednesday. The VIX expiration is Wednesday morning. And then GME still looks super liquid and shitty. Once the Friday 15 calls give up, which they haven't yet, but they will, because they're already unprofitable. That'll open up some more of the downside range to delta neutral, which is around 14. Once it loses 14, it's pretty free and clear to just keep dropping. Upstart didn't have super hot day, but is still kind of chopping around above Gamma Max. Fubo pulled back a little bit today. It's getting shorted a little more aggressively. They take advantage of that slight dip in Russell earlier in the day to really bring the price down. Siri ran a little bit today, almost back above the trend. From a liquidity standpoint, not a lot of actual covering being done, but a little bit, and most of it in the early part of the day. But it did close above $5, which is significant. Top still getting shorted, despite the obvious lack of liquidity here. They are shorting really hard. So maybe that we don't see top run till after OPEX, and they lean into this short a little harder over the next like 4 days. Beyond actually started running today, and despite the clearance of liquidity that they've got for this period, it looks like options demand picked up. So this may keep running. It closed above gamma neutral for the first time, which is moderately significant. Delta neutral's still up around $11. This is still on Reg Show. The majority of forced covering due to Reg Show doesn't come until next week, so it'll be interesting to see if they are able to control the price on it well enough to keep it from blowing up. But if it runs really hard while it's on Reg Show, that could be a significant problem, not only due to the lack of available liquidity. The borrow fees in the lending pool are quite high, and it forces the market maker to create synthetic shares in order to appropriately delta hedge. edge, which has a, reflexive effect and causes gamma squeezes. So yeah, that one's kind of interesting. We'll see how that goes. I picked up a little bit of exposure tonight. If they kill it into the morning, I'll drop it and wait. But if it's got that much pressure that it's running on a day when there was, less than 100,000 shares of forced covering, it might really start running. Yeah, I think that's about it. So for tomorrow, we're looking at CPI coming in the morning. I think the analyst expectation's about 3%, which means headline coming in at -1, -0.1 month over month. I think that's probably going to be closer to 0 or 0.1. If it comes in at 0.1, then inflation will be at 3.2. But headline doesn't really matter here. Oil prices are back down, so we should see the creep in headline die off. And then also the repricing in medical costs lasts, as of the last report, until 2024 is going to be disinflationary. However, core is expected to go up. Core CPI is expected to rise by 0.3 month over month, with Cleveland Fed expecting almost 0.4. 0.3 and 0.4 are both hot. Any print over 0.168 on core CPI is hot. And so since that is the primary focus of the Fed's higher for longer policy in dealing with that sticky price index where, we're not really seeing inflation moderate nearly as fast as we are on headline, the effect of that is going to be that, some repricing, if it does come in hot, that some repricing occurs in the federal funds futures. It really depends on how much. I don't expect we'll see a ton of repricing until after JPOW speaks, but we could see a little, and that could pull our prices, back towards the 4,600 level. But I still think we're going to kind of hold 4,600, 4,620 around there into JPOW's speech. So it may cause a pullback in the morning, but don't expect it to persist or last. It'll probably resolve itself with some profit taking on the put side and then bounce right back if it is even hot. And if core and headline are cool, which I highly doubt happens, but there is some chance, like a 10% chance, that they both come in cool, expect a gap up 46.50. We'll have a hard time holding that level simply because it's, both right below gamma max and significantly above the market maker's Vega neutral, but it should at least be able to hold 30 for the rest of the day, I would say. So if we do get a scenario where we gap up, expect tomorrow to be very flat or grindy, similar to today. If we drop tomorrow morning, expect a bounce. And if we go up a little bit tomorrow morning, but if we fail to gap up, like we just move up to like 46.25, we'll probably also have a pretty choppy day. So not a lot of super interesting outcomes. I mean, as far as trading goes, obviously the hot core print with a pullback to like 4,600 and then a bounce back to 46.25-ish would probably be the easiest one to trade. Thank you guys so much for tuning in, and I'll see you bright and early tomorrow morning at 9 a.m. All right. Good night, everybody. Later.